Hello and welcome to the Gold Newsletter channel. My name is Kai Hoffmann, and together with Brien Lundin, I'm the host of this Gold Newsletter channel, and I'm really looking forward to this company introduction. The company hasn't been on yet. You can see them sitting already next to me because we're here in New York at the SME Current Trends in Mind Finance Conference. Alexandra, David, thank you so much for joining me. Empress Royalties. It's good to have you on the program for the first time.
No, fantastic to be here. Thank you so much.
Really looking forward to the next 20 minutes chatting and learning more about Empress, of course. Not sure who wants to take it, but we need to start with an introduction. It's your first time on the channel. 30, 60 seconds. Who and what is Empress?
So Empress is a royalty and streaming creation company. We're focused on precious metals, and we're really investing our dollars into revenue-generating assets. We launched the company about 3.5, 4 years ago with a very clear strategy as we saw an opportunity in the market that needed to be filled. And David and I teamed up to launch this company. And if you want to give the...
Sure. So David Rhodes, I'm the Managing Director of Endeavour Financial, one of the top financial advisory firms in the mining sector. And we saw a gap in the marketplace. There's no one else doing royalty and stream creation, which Empress does, and we can explain that further, and of the sub $50 million size. So no one was in the marketplace. And what do? Well, you set up your own company and develop and create value in that opportunistic space.
Let's start with that. Let's start with the definition of what you just mentioned, royalty and stream creation, because that sets you apart. Because there's quite a bit of competition in the royalty space, but not in the space you're in. Like, why is your approach unique?
Well, there's probably about 30 public companies in the royalty and streaming space now. We're more focused on the streaming side, so that's where we're getting investing in the company and getting direct gold or silver from, we're able to buy a discounted price. There's a lot of different types of royalty and stream companies. There's the exploration, early stage, and expensive to acquire, but no guarantee it will turn into a mine. And there's a lot of groups out there also buying third-party royalties. So again, it's pretty simple. It's just trading paper, but there's no direct relationship with the company and historically low returns. We're on the creation side, and that's really leveraging off our experience as a management team in structured finance to create this financing solution, really be able to invest our money into mining companies, helping them either get into production or expand upon the production capacity. And as a result of that, we're able to get great returns and also have a very close relationship with them so we can really monitor our investments. We have monthly reporting, we're able to go to site, we do extensive due diligence into these projects before we get involved. And again, that's using our experience and where we see the opportunities.
So, but creation means like there wasn't an NSR or a stream or anything on the project before, or maybe just a secondary one, and you were able to sort of come on top and create a completely new stream. Is that correct?
Exactly. So we are really investing in that mining company. And Alex mentioned there's other forms of streaming companies. So we're not buying a piece of paper and making the owner of that paper rich. We're actually investing, the company's dollars into developing, as I say, the most recent one we've done with Galaxy. That's expanding their underground mining to have more throughput through the mill, which obviously doubles their production, reduces all and sustaining cash costs. So really investing is our key.
What's your IRR approach? Like when you do an investment like that, like what's your payback horizon?
Our IRR in the portfolio is about 30% at the moment. We've invested 19 or 24.5 now into the portfolio. The NAV is close to $60 million. And from those 4 key investments we've made to date, we're generating about $60 million US of revenue over the next 5 years. So it really is targeting revenue generation in assets that will be in production.
Yeah, and the key strategy when we set the company up was gold and silver. That's all we do. Yeah. So I know a lot of people diversify because suddenly iron ore is high prices, let's go there. No, gold and silver. We're firm believers that in both those metals, obviously seen recently big increase in both, so we've been rewarded for our passion and belief. And then secondly, it is, creating, as you say, being part of that, value add. So we both, by investing, add value to the whole thing. And then, within the whole of those 2 key strategies is revenue. So unlike the example Alex gave, if you're doing the geological bit where you invest in a bit of drilling and hopefully it becomes a mine in 10, 15 years, no, we're looking to invest in either producing companies today or very close to producing companies. So we get cash flow coming in. And from a business point of view, we're all about, as soon as you've got cash flow, cover your costs, then you can reinvest your excess cash flow. And that's our main drive in our business, is becoming cash positive, which we are, and then we're able to reinvest that and avoid dilution for shareholders.
Let's talk about that. Let's talk capital structure, because usually that's the second question I always ask, so we skip that part a little bit. But run us through that real quick. Like, how many shares do you have outstanding, and who are your main shareholders?
So we have 118 million shares outstanding. Our shareholder base is 25% is management and board. So that's management board, Endeavour Financial, Terra Capital out of Australia are all large shareholders, and we're all part of the investment committee. And then we also have some really good strategic shareholders. Rick Rule became a large shareholder of ours. Stefan Gleason out of the States, who runs one of the largest billion desks or funds. We have, Sprott, two of the funds in there, Frank Holmes, US Global. So we've got a really good shareholder base. Most of them have been increasing their position recently as well in Empress. And, we're able to fund this as we have a debt facility with Nabari. So we just signed at the end of last year a $28.5 million accordion facility with Nabari. We drew down $3.5 million to repair existing debt. We drew down $5 million to finance the Galaxy mine in South Africa. And now we have $20 million available to us to really deploy further into the portfolio and bring some of these exciting opportunities we're seeing in the pipeline into the portfolio, again, generating further revenue.
How difficult is it creating those opportunities right now? You say you see a lot of them, but like, how difficult is getting them? Like, coming back to competition as well. Yes, you're in a bit of a unique space because you're creating new royalties, but once the discussion has started, I'm sure the vultures start circling.
Yeah, well,
right?
we haven't been in a competing bid process to date. We really are leveraging off our network and our experience as a management team and as a board to get these opportunities. We're seeing a lot of opportunity, especially in the last couple of months. We just brought in a new vice president of corporate development, Nora Pincus, who comes from a structured finance background as well, to really source the opportunities. So our pipeline is getting quite thick at the moment, and I think we will hopefully advance some of those. But the process we go through to do that, again, we're not just assigning a piece of paper. So it's quite an extensive process. We do a desktop review supported by Endeavour Financial, because Endeavour Financial is our investment manager. So it really allows me as a small team to punch above our weight using your financial analysts, mining engineers, geologists to vet these opportunities. And then if we can get to agreed terms after a desktop review, we'll get into a term sheet, exclusivity there, and that's when the due diligence, hiring independent third-party engineers to look at the particular project. If that advances, documentation and then implement.
So there's a lot of work goes in.
Yeah, it's a lot of work.
And obviously not every transaction we look at works. It could be from environmental, social, technically it doesn't work. So there is a very extreme, and that's one of the competitive advantages, because if you're a larger stream, which obviously take Wheaton, for example, they do $150 million ticket size type transactions. They don't want to come and do the 5, 10, 15 our size, because there's just as much work, and they've just grown. So we find limited competition because most of them are too big now and don't want to do the smaller streams.
What are you promising your investors? Like, what do the Rick Rules of the world try to get out of this besides share price appreciation? Are they looking for a dividend? Is that something that they've been wanting and asking for? I'm just curious, how they want to be rewarded.
Well, it's a good question. So we've got quite a diverse shareholder base. We've got quite a lot of Europeans, and Europeans are...
They love dividends, yeah.
They love dividends. and to be honest, when we get our portfolio, mature and the cash flows coming in, which will probably be 18 months away, we're looking to add some more assets to diversify that portfolio as well. We'll look at a dividend policy. Share appreciation is great, but how do you monetize that? You've got to sell a share. We don't want our investors to sell any shares, so we'll reward them with a dividend. And that should keep them, as I say, not now, but in 18 months, so dividends is definitely going to be a policy. Interestingly, when you talk to some of the North American markets, it's all about buybacks. So let's see where our share price is. It's interesting because we don't want to buy back when the share price is too high, which it should be when we deliver, and as we are delivering. So let's see about more dividend focused.
I was going to knock on here, but it's a marble table, so I was like, so that doesn't really work. Run us a bit through the flagship assets you have. And you mentioned cash flow in 18 months, so run us a bit through it. Which project is going to be the first one to deliver, and what are we looking?
We actually have 4 assets now that are producing revenue for us. So the first one we invested was a producing asset, was a mine called Cerro Antipite in Peru, owned by the Sierra Sun Group. That was a mine where they needed some expansion capital to expand the production. We provided that. We've received consistent revenue now for over 2 years from that, and that's just starting to build up as they do the final ramp up. We invested in one in Mozambique. It was a development stage asset. They got into production. We've been receiving consistent revenue from that project for over a year. We just announced the Galaxy mine, so they're just getting to the ramp up. They've just got the equipment was just delivered to site. They're starting to go through the training. We just had a call with them yesterday about that. So really excited where Galaxy's going to go, and that should bring in over about 1.7 million US using, I think it's 2,100 gold. So I mean, there's a huge potential for some good revenue coming out of that one for us. And then we also have another one we invested in Mexico called Talahueto, owned by Luca Mining. That was one we invested in a couple of years ago, and they're just now getting into full ramp up and production. And that one we structured as a silver stream, so that'll be great when that silver starts coming into Empress in a meaningful way.
At $32, yeah.
So yeah, exactly. So we've done a lot of modeling at 22. So for us it really is. We've got 4 sources of revenue now. Those are all starting to stabilize. Layering in some new investments from the pipeline. Get 5, 6, 7 sources of revenue. And then hopefully get to that point where we are cash flow now positive, but be able to reinvest that and move the company forward.
How difficult is it for you to provide the market with guidance? Like, from the producers, they say, okay, we're going to produce X this year. How difficult is that for you? Because you're not really in charge of the ramp-up process. And we all know mining is a finicky beast, right?
Yeah. No, that's a good point. I mean, we get obviously the annual budgets, we get the monthly reports, we understand where they're at. We adjust our model based upon what the management's telling us. But yeah, we're not operators. We are essentially an investment company that invests in the gold and silver projects.
So it needs a lot of trust and due diligence.
A lot of due diligence,
Because
a
in the
lot
end,
of
your
reporting.
reputation's on the line.
Absolutely.
Right?
So we work hard. We work closely with the companies. I think it's also important to say, than typical royalty companies, as we're using the streaming structure, we're taking security over their assets. So in all the cases, we're either first ranking security, we've put people on the board. We're very hands-on with our transactions, really trying to support these companies to get going and to meet the milestones they want, because we need them to be successful for us to be successful.
Okay, maybe last question as well. 2,400 gold, $32 silver. How difficult is it, and what is the pricing environment now for you? Are terms changing on a daily basis for you? Like, is it getting more expensive to acquire those streams?
We haven't seen that yet. We're seeing more opportunity as a result of that. There's obviously the equity markets haven't started to reflect it yet. So there's a lot of great companies out there that want to do more exploration. They're already in production, or it's a restart, and they don't have access to that capital. And they don't want to burden themselves with debt. So we're finding a lot of opportunities because of where the market is at the moment.
Good point, actually brings me to optionality place, because at $2,400 gold, all of a sudden, mines that might not have been profitable or marginally profitable really start to shine, or maybe come to production, right? Is that what you're tapping into? Is that something?
Not really, because obviously gold price, whilst it's doing well now, I mean, most of the streams are, life of the project. So your life of the mine. So you've got a long-term return as a streamer. That's the product you're offering. So gold won't always be this high. And we don't obviously want to have in a couple of years' time when gold falls, or maybe it doesn't fall, whatever may happen to it, certainly not have a mine that's not profitable on that basis. So, we're more, most of the assets are more expansion. Very simple. So someone's producing 30,000 ounces of gold. It'll cost them $5 million to put another mill or grind in there, and it adds another 30% to their production. So very simple.
Let's talk about actually reserve pricing. You mentioned $22 silver is something you used in previous calculations. I know Barrick uses, I think, $13.50 in their reserve calculation. I think Newmont is at $14.30 or something like that. What do you use for your models?
Yeah, well, as Endeavour Financial, you've got a good view on that.
Yeah, so I mean, we are still using $21. That's purely because
silver and for gold.
For gold, yeah. So we were $17.50, and now we're $19.00. Moved up on that side of things, and that's really just the basic modelling we do for our return, and then obviously sensitize it depending on our views of how they're going to perform. So there's a lot of sensitivity analysis behind it.
Fantastic. Like, what can we look forward to now from Empress? Like, give us a roadmap for the next 3-6 months.
We really want to deploy that money we have from Nebari and bring some new investments in the portfolio, similar to what we've done before. So it really is growing the portfolio out. I also feel that with our tie so closely to gold and silver, that should start to be reflected in the share price as well. And then, with those two new investments, getting a proper reflection for how pure gold and silver we are. And then our financials results as they start coming out and showing and demonstrating that we're delivering what we've said, and then the revenue will start to increase.
should have jumped on it earlier, but regionally agnostic, like, because you said Mozambique, South Africa, Peru, not necessarily like tier 1 jurisdictions, or Mozambique, I wouldn't even know where to rank it personally because I don't have any personal experience. So I'm curious, like, where are you looking?
Well, mining's global. As long as we've done business there before, and this, from our history of doing deals, we know the laws, we know the regulatory situation, we know how the labour force works, we know how to transact in a country. We'll look at it and suggest it to the Empress Investment Board and make a decision. So, I have a view that, some of the tier 1 jurisdictions are pretty tough to work in. I mean, at this conference, 10 years to get a permit. I mean, wow, that's a lot of capital wasted just sitting there waiting for your permit. Other countries are more flexible on that. They need the GDP growth, they need the dollars, they need the employment. So that helps to make some countries that people go, ooh, why that? No, they actually are pro-mining, pro-investment compared to tier 1. So yeah, we'll look at all the good mining jurisdictions, and we've expanded that for ones that we know and can operate in.
Yeah, so we're going to continue to look in Africa, South America. We're starting to look at a couple of things in Asia, but that will definitely be our focus, and that's where we're also able to get great returns in those jurisdictions.
Yeah, because nobody else is looking there, really. It's like, or very few people. So, no, fantastic.
And that's using our expertise and experience.
Yeah, where can we follow you more?
EmpressRoyalty.com. We're also on LinkedIn and all the different social media channels. So yeah.
Phenomenal. Thank you so much. It was great seeing you. It's always great to meet in person.
Yes,
Always
it is.
way better than any of the Zoom interviews. So really appreciate it. Everybody else, thank you so much for tuning in. I hope you enjoyed this conversation here with Empress Royalties. If you did, make sure you leave a like, a thumbs up, Subscribe to the channel, leave a comment. We always want to hear from you, and we'll be back with lots more here from New York from the SME conference. Thank you so much.